Fantastic. Hello, everyone. I think this is going to be another edition of Griffin Uncut, hopefully, which is the Griffin podcast. Today, unusually, I am serving as your host rather than your guest. And with me as my guest is Ola, who is the uh, co-founder and CEO of Verto FX, a cross-border payments business for merchants principally. But before I sort of butcher that any further, do you want to introduce yourself, give a little bit of background on you and Verto?
Yeah, sure, absolutely. And thanks for having me on Griffin on Court, David. So I'm Ola Oyetayo, co-founder and CEO of Verto. It's Verto FX, but we just want to call ourselves Verto going forward, because there's a broader offering than just FX. So that's how we reference the business. We're a cross-border payments platform for businesses, as you mentioned. Big focus on emerging markets. I think that's something that distinguishes us from the other players in this field. We've been around. We founded the business in 2018 and really came to market in 2019, and have been headquartered in the UK, powering businesses across the world since we founded the business. And yeah, that's pretty much us.
Cool. Um, let's start by digging into you. Um, so give us the superhero origin story. Like, where did you get your magical powers from, and how did you come to found Verto?
Yeah, sure, absolutely. So I don't think I have any magical powers, but I'll oblige. So I'm Nigerian. I came to the UK in 2005, so summer 2005, so 20 years ago now, to study. I liked the weather, so I decided to stay, and the weather's been getting progressively worse since. So I don't know whether there's a move to Dubai in the future or something for better weather. But really kind of started off working in financial services. So I trained as an accountant, and got my first job in corporate finance with American Express, and then also did some stints at Barclays and Lloyds Bank, all in the UK. So I'm maybe unusual as a founder because I'd spent, probably the closer part of a decade working, in core financial services. But I think it also helps because when I thought about kind of like uh, problems and pain points that I wanted to solve for, uh, the problems businesses in emerging markets had with moving money and being paid from companies abroad kind of resonated very well. And I thought that I was very well served, given my experience in financial services, to found a business in that space. So I teamed up with my co-founder Anthony, who's as chief product officer and chief technology officer. So he actually does the real work, right? And I just turn up for these sort of podcasts. So I teamed up with him because I was very clueless about tech, but I knew that the only way we could solve the pain points that merchants and businesses that deal with emerging markets or in emerging markets had with moving money across the world had to be utilizing technology. For me, it's solving a problem that is very close to heart, and something that I know that a lot of the friends I have with businesses that are in emerging markets or deal with emerging markets have as a pain point. So that's kind of the origination of me wanting to build a business in this space and how that's been manifested over the years.
Yeah, I love that you and Anthony have your on your company's house profiles. His describes him as an entrepreneur, and you describe yourself as an accountant, which I just think is very very funny. In whatever the like original kind of director profiles, whenever you set the company up originally,
Thank you.
that's super funny. How much of this was driven by a specific company or a specific story that you had, a friend running a company, someone you'd run into in your sort of professional life, really kind of unloading and kind of sharing how deep the problem was versus what you were seeing maybe at more of like a portfolio level and then having to actually drill in and getting into the market. Like, how did you I suppose, and so there's equally parts kind of like how did you develop the product thesis of what you wanted to offer, and then also how did you find your first customer?
Yeah, sure, absolutely. And there is a story here. So, whilst I was working in the city, I kind of like obviously had a decent network of friends. Some of them,
Yeah, decent network of friends. I don't have that. I still don't have that. I've been here like a decade.
it's always helpful to know someone that knows someone, as you know. And it just so turned out like in a particular period of time, a lot of my friends, mostly with businesses in Africa, started reaching out because they were really struggling to do cross-border payments, and these were like very well kind of established businesses turning over tens of millions of dollars.
Mhm.
And I just found it super weird because I was like, okay, so why is it hard for you guys to get paid? Or if you're dealing with China or if someone in the UK wants to pay you, why is it such a pain point? And so I started looking into it, and then a particular friend of mine, who does some business with Oracle in the US, reached out and said, "Hey, I need to make a payment to Oracle, and I just can't because
Literally can't
yeah,
give them the
because
money.
like the banks won't touch me because I do business in Nigeria and all of that stuff, and I need to get these funds out to them. I just thought, wow, this is kind of like weird, right? Like, why would you have this kind of issue? And you're paying a reputable business that it's a partner of yours. Um, so I then started doing a bit of research, and I'd always kind of wanted to do something entrepreneurial. So and I think there was a confluence of events where I then kind of looked more into kind of the space and realized there was a huge kind of remittance opportunity with doing remittance between the UK and Africa, and Nigeria in particular at the time. It was a big corridor. So I decided, why don't I start a remittance firm that basically just helps, folks that might need to send money into kind of Africa. And then off the back of that, realized that the consumer space was super crowded, like tons of people doing this very well and utilizing technology. And then, I still kept getting all these requests from, businesses about, hey, I need to do cross-border into these markets. And then so the penny dropped. I'm like, okay, maybe the approach here, so actually do a B2B play.
Yeah.
And then I had a bunch of friends, probably about a dozen of us. They used to hang out monthly at the time for regular sort of poker sessions. And we're mostly like folks that worked in the city, mostly with sort of an African background. And Anthony was one of them. So at one of those sessions, I was just telling him about kind of, hey, this is a big deal. Like people can't get paid in all these markets. There's no one really cracking this code. It's a huge opportunity. And then he was like, super interested because he had, I think at the time, had started an MBA and had also had a prop tech business that had failed. So he'd learned kind of the early founder lessons, and it was really big into technology because it led sort of large tech teams at banks delivering kind of programs for banks. So we kind of just said, hey, why don't we take a stab at this? I think that with both our backgrounds, we probably stand a very good chance of giving this a go. And that's the founding story. So that's where we said, you know what, let's kick off and get something done together. And then we thought through what should we call the business, what's the play here. We landed on Verto FX because Verto means swap in Latin. So we
Mm.
felt like swapping currencies was, very kind of logical with respect to kind of what we're looking to build. And then we also kind of we thought very early on that, hey, the only way to solve this is by building a tech platform and making this kind of like, technology based, and also most importantly, uh, getting the right sort of regulatory permissions because we're both in the UK. We, both going to spend time in financial services, and we understood the importance of like of placing like a trust layer on your business by being regulated. Which I think one of the things I admire about what you've done is you've literally you've done the hard work. You've
Yeah.
took your time to get a banking license, which not everyone is keen to do. So I think so for us it was like, hey, let's get regulated. We're in the UK. let's build a fintech here to kind of solve this big problem. And that's kind of like how we started off. Now I don't recall if I won or took his money at that poker session or he took mine. Because I
So
guess
I was just about to ask, and how did you fund the business in the early days?
yeah.
It's like, well,
So so we weren't professional poker players, but so we funded the business we sort of bootstrapped for the first few months, funded it with our savings, and then we were lucky we got into Y Combinator in the winter of 2019, and YC kind of like opened the doors for us to do a $2 million seed round that summer, and
yeah.
that's kind of the founding story.
And how would you describe like the culture of Verto, and how much of that is like an organic reflection of you and Anthony and how the business has evolved versus like really active decisions that you made early on where you both worked at a couple places. I mean, he obviously had the prior entrepreneurial experience. How much were you like borrowing from the library of kind of corporate cultures that you'd seen already versus, the common sort of founder early entrepreneurial experience of like, I'll have time for culture like when I'm not like about to die.
No, that's a very good question, and I don't think I've been asked this before. So maybe for context, I think there's about 190 of us now at Verto, and it's about 80 folks in the UK. We've got people in India where most of our engineering is based. We have people in Nairobi, in Cape Town, in the UAE, and in Lagos. So it's kind of well spread out, and it's kind of grown to size now. But I think that it was very intentional. I'll describe the culture here as it's a talent meritocracy, and there's no BS, and it's all about kind of just getting work done, and that's very very important, and it's been intentionally kind of built that way. We do some weird cultural stuff. Just before we kicked off this podcast, I was on back-to-back probation reviews. So
Mm.
when you join Virtual, it's a 3-month probation period, and then we actually have an actual interview 3 months into you being into the business, where you kind of present what you've done in the first 3 months, and you give your feedback on
I
us as
love that. We've been thinking about doing like almost like panel reviews
yeah,
of
yeah,
probation because
yeah.
it's
We
just
do we
it's
do
so
that.
easy to just kind of like automatically,
Yeah.
but yeah, it is
100%.
a real
So that's kind
like
of so that's
yeah,
how intentional we've been about the culture. And this is kind of like myself and Anthony join. He's like right now in Johannesburg, and he joined the calls as well, right? So we
yeah,
both get on these calls, and we do kind of a peer review as well, where there must be at least 3 people that have worked with that person that
yeah.
does give feedback on that person, including their manager. And then myself and Anthony take that, we go off, and then we make a call, and this is kind of Darwinian. So we make a call on, hey, should we pass this person for probation? Should we extend it for another 3 months? Or do we say goodbye at this stage? And that's just kind of like because contractually it's there, and we just use that as an opportunity to make sure that it's the right cultural fit. So I guess the answer to that is it's been very intentional. Because I also think that one of the things I think we're proud of as a business is that we've done a reasonable lot. We've done a lot reasonable in the time that we've been around, with kind of like the amount of funding that we've raised to date.
Yeah.
And that's because we feel that the right team executing at speed towards a common purpose or goal is so much much more important than just basically just getting kind of wrong people together and they're able to rushing to get stuff done. So culture is super important to us. And then also kind of I was very lucky because my first job was at American Express, which it's kind of like, I mean, everyone knows the Visas and MasterCards of this world, and you go to the stores and you pull your Amex card, and sometimes they say, hey, we don't take Amex. It just looks like a random kind of company, but it's got an extremely strong, incredible culture. And I was
Yeah.
really blown away because when I left and I joined Barclays after that. I was just blown away the fact that you had people at Amex had been there like 15, 20 odd years, and they just genuinely loved what they were doing. And kind of like, and they was just so passionate about the business and what they did.
It's always struck me. I mean, I've never worked there, but it's always struck me as uh I can't. I think Amazon's culture has drifted quite a bit in the last like decade, but I
Mm.
think like early Amazon, where you had that combination of like fanatical focus on customer experience,
Yeah,
but also incredibly high expectations for operational excellence,
excellent. Yeah.
like really are what I think of when I think about like Amex.
Yeah, no, 100%. And I was lucky to kind of witness that in real time. And at the time it was being led by Ken Chenault, who was this like, I think he's like a general catalyst now. He was this rock star CEO, kind of like, one of the only like black people to have run the Fortune 100 business and all of that stuff.
Yeah.
And it was just a phenomenal leader, right? So I think spending time in that culture, I think I was there for like 2.5 years or 3 years. I was like, whoa, so when we thought about, building a business and kind of stuff, and obviously we did YC, so we get the whole startup kind of scene. But we also thought, you know what, I think you can do well by building the right kind of culture and embedding that culture, and hopefully it scales. But to your point, which is maybe kind of why you think the Amazon one has drifted a bit, it's ultimately at some stage, the law of big numbers, it's just so hard at some stage, becomes quite big, which is why, being very intentional about kind of the leadership team as well, and who you bring into that circle, I think also is a way to ensure that you keep the culture intact. So the long answer to your question is that I think the culture has been intentional and it's still evolving as well. We get a lot of stuff wrong. We're by no means perfect, but the most important thing is that we learn and we iterate as well as we go along, and that's been an incredible sort of experience. Prior to kind of starting Verto, I think I'd probably only manage one or two people, right? So now, how do you manage a business with almost 200 people, and what skill sets do you need? It evolves on a daily basis.
Yeah. God, there's like so many questions we could go after from here. One I think that is maybe just keeping on that theme of like cultural change is like, um, can you think of like like a key moment where things really changed in a big way? And so we've kind of just gone through this ourselves. I mean, as you say, right? Like it's a living thing and it's always changing to some degree. Um, but for us, going from our kind of build mode to run mode, um, was a change, but actually what happened was like there wasn't really a change right away, right? So like we got fully authorized, we went into market, and then really kind of like around end of last year, start of this year, as we were coming up on the kind of like 1 year anniversary of having been in market, it was like, okay, cool. Like this isn't working. Like we have not changed enough. We need to like move to just like a much more high performance, like direct. Um, I hesitate to use the term like confrontational, but like
Mm.
um, you know, much more willing to engage in very direct, healthy disagreement and debate than we had before, where, we were kind of like, all right, well, we're all kind of building and moving in this direction, and we kind of have the shared vision. It's like once you're like in market, the sort of constant information and feedback that you get means that like you need to be much more responsive to that, and you also need to like just be willing to like really like kill your darlings, right? So like whatever you thought before, it doesn't matter once a customer tells you that doesn't work, right?
Yeah, 100%, 100%. And I think it's a very good lesson that you probably only learn in kind of an early stage business as well, right?
Yeah,
Because, most times most businesses are established, you need to really have a huge kind of macro event or some bad leadership for anything to go awry. But when you're kind of super early, right? Because every step you take, every decision you make is important. And but we had always been in kind of like go to market mode. So the
yeah,
beauty about what we did was, from the get-go, we were already having like maybe the first customer, second customer was already generating revenue.
yeah,
We've been to like 5 versions of our platform. We had a very crappy early stage kind of type of the I actually started, on WhatsApp, created a marketplace,
yeah,
matching people on WhatsApp and all that stuff.
yeah, just like the
We've
early
always
wise
been,
guys, right?
yeah, so we've always been in market, right?
Yeah,
And the thing about being in market is you're constantly getting feedback,
yeah,
because it's a competitive space as well, right? So,
hmm,
if you're sitting on your bum, whatever, you're gonna get like the competition come for you, right? So you need to be super, super like um aligned with the with what the customers are telling you, also getting to the real-time feedback and adjusting and adapting as possible. We had a period where we had a phenomenal product in the UK, which was scaling very quickly, which was kind of like accounts for businesses or merchants, right? So, we could give the sort code account number, and that was doing very, very well. But we were very, like, I think, in attune to the risk side of this, which is kind of like, if you open up an account and someone can quickly have access to, being able to send 100,000, pounds via faster payments in real time, right?
Hmm.
That's like, it has a lot of, implications from a fin crime perspective. So you need to be on top of that. And then we came to a place where, like, you know what, we're going to have to severely restrict these products because we're just seeing the fact that it's such a huge take up, but ultimately, it also has its, financial crime implications, and we're just not set up for that because we're not here to help a UK business send money to Birmingham. We're here to do like cross-border payments, right? We want to.
There are people who would argue that that is a cross-border payment,
Oh
but
yeah, well
yeah.
yeah, sure. I don't want to get to the London to Birmingham divide, but yeah. So we kind of like so that for us was like it's kind of one of the inflection points. Like, you know what, we're gonna have to restrict this product to only people that also want to do FX and cross border, right? And that also means that we can have the right controls in place. Also, about a year ago, we also intentionally decided to do more enterprise customers because we built
Mm,
this phenomenal infrastructure, especially in emerging markets where we could, collect and make payments in certain markets, and no one else had that sort of build. And then we felt that, we either kind of try to get as many merchants to use this as possible, or where we can get larger enterprises and expose them to our API, and basically they can use that. And that was also kind of another inflection point where we needed to actually then intentionally build sort of a customer acquisition team that understood enterprise. So you do enterprise sales. It's more of like solution architecture and engineering, more of a
yeah,
consultative approach. And then the customer success or account management is very different because you're dealing
yeah,
with larger enterprises. So we had to sort of build that up from scratch as well. So we typically go through these phases, I think, every year, or every 18 to 24 months. And the key to this is just to always stay adaptable. The only way you stay in the game is actually have something that people want and a
yeah.
product that is actually able to make someone's life easier. And the only way to do that is just constantly listen to what the customer or your market is telling you, and that's kind of what we try to do.
Yeah, the YC mantra, make something people want.
Make
Like,
something that
I
hundred
yeah,
percent. I
think about
think
that like
yeah.
daily.
Okay.
I want to double click on the enterprise thing because we've kind of gone on that journey ourselves, which we started going on, let's say middle of last year, and we're, I think, like more or less there with our first kind of like true enterprise customer.
Mm.
We're now, I mean, it's not like done, but it's like we're in the contracting phase, so it's like sufficiently done that like the will to buy has been like largely locked in. Um, uh, at the same time, it's one of these things where like the lead time is so long, the go-to-market motion is different, like the entire way that you work with these customers is different, and it is, it's easy to get worried that it's like an investment or a distraction, right? Because you're like, okay, cool, I'm going to spin up like this bunch of people who's going to go after this, and in the worst case, they might not get any results for like 2 years.
Yeah.
Um, so like, why did you feel that like now was the time? I mean, sorry, not now. Like, how did you know that that time was the time, right?
Sure.
Like, um, yeah.
No, so very, very good question. I think that for us, we're lucky in the sense that we had this enterprise customer that basically said, "Hey, I need to be able to do X, Y, and Z, right?" And this is
So
kind of
should we talk about how you landed that first customer then, like
yeah,
that first
sure.
enterprise customer?
Yeah, sure,
Because
absolutely. So we had obviously we have an active website. We do kind of LinkedIn targeting and sort of
yeah,
paid marketing. So we get a lot of like requests, right? People come and say, hey, speak to sales, right? You just come in and say, here's what I want. So we got one of those kind of requests, and the person, oh, I'm trying to do X, Y, and Z, and we're like,
yeah,
okay. We don't have that right now, but then we're like, oh, okay, it's this company. Okay, well, this is a big company. And then we're like, okay, cool, let's have the first call. And then we had the first call, and they're like, oh, this is the problem we have. We're like, okay, we have kind of the solution. It's not wrapped up in a box, but it's this
Yeah,
company, so we should be able to build something for them. And
yeah,
that's kind of like how that works for us. And then
yeah,
obviously it took us, say, 3 to 6 months to get something working. And then we just thought, you know what? Uh, and then we saw the traction and how that scaled, and we just said, let's just try and get more of these sort of guys. And then that's what led to us saying, what do you need to do to build an enterprise kind of acquisition function, and what do you need to do to service them? So what I find is that most times, back to what we said, build something people want. You kind of listen to what the market says, and kind of what your customers are saying, and that way you stay adaptable. I do think there's a fine line though, because obviously, in the startup world, there's a lot of pivots as well. You can't kind of over pivot, because that
yeah,
almost means that you don't have product market fit.
yeah,
So, there's been great stories of folks that, go in and want to start doing something, and they get pulled in a different direction and they scale that. That's
yeah,
great. But you can't be pivoting every, like, other month or every 6 months or something. It just means that you haven't found product market fit. So being conscious of that as well. I think you can pivot where you're selling your product to, constantly. You can derive new ideal customer profiles just
yeah,
because that's what the market says. You can also extend the regions or the corridors or the markets in which you service. That you could do by geographical expansion. We tend to do that a lot as well. So maybe a version of the product that is localized for a specific market, but you know that there's a need there, and you pull that in there as well. So that's another approach. But I think just over pivoting, just because you're looking, to kind of get some growth J curve going.
yeah. Well, I mean, if you don't have the right product to begin with, right, like
Yeah, it's gonna
then
be
then you're
hard for
kind
you.
of just
Yeah,
thrashing, right? But I totally agree with you. Like it's like a small pivot every day when it comes to like go to market, right? You're
yeah,
just like, all right, like I just have to be reactive and responsive and always figuring out what's working, what's not working. Like, how do I make this better, faster?
yeah.
Um, cool. Why do you think that cross-border payments and remittance remains such a hard problem to solve?
Mm, mm. I think there's a few reasons. So one is that it's it's inherently involves having to move value from one location to another, right? So it's not
Mhm.
like telecommunications, which I think WhatsApp, for example, has done a great job of, like, breaking down barriers, right? So back in the days, if I was going to call my mom in Nigeria, I'd have to get a calling card and pay for it, and scratch it on my phone and do all of that stuff. But now you can just WhatsApp her, and it's real time, right? I think moving money and moving value still has barriers, just because internationally there's a lot of correspondent banking, and currencies are also different, because every country wants to kind of have a sense that it has its own currency. So the fact that there's this natural barrier of friction that has to do with kind of currencies and location means that cross-border payments and remittance is always inherently involves a lot of friction. And there's also like compliance layers to this. So sometimes you send money, it gets held up on one side because someone wants to make sure that it's being sent to the right person, or it's being sent to the right industry as well. There's sanctions as well. So there's tons of reasons why it's broken. Why I think that there is kind of room for innovation and improvement, and sort of like removing the fragmentation, is because I think technology has a role to play in removing most of the frictional barriers that you have in place. So if you take like compliance, for example, there's a way in which you can actually just do real-time checks on sort of beneficiaries,
Yeah,
which technology only enables, right? So you do sanction screenings and all that stuff, as the money is being sent, just to make sure that it's being sent to the right sort of place as well. There's also kind of regulatory rules as to how you engage with customers. So like KYC and KYB. I think technology has a role to play in that. So if I genuinely want to use a platform and I don't have any ill intent, I should be able to kind of get onboarded and use that platform as quickly as possible. The only way to speed up that process and make sure that you're still adhering to whatever the local regulatory requirements are is mostly through technology. So you get to pull kind of company ownership details and directorship through company house and APIs and all that stuff. So that's also kind of useful as well. And then when you then get to, in our case, send the actual money, there's a world in which you probably don't need to do that if you hold pots of or pools of funding in those two different markets. And the whole concept between the liquidity management and
Yeah, this is the beautiful thing about Wise is like,
yeah,
especially if you have a large enough consumer base,
yes,
you
100%.
get
Yeah.
like bilateral flows and you just net them out,
And then you just
right? And
let
you're
them
just
out.
like,
Yeah.
yeah, no, we just got money on both sides. It's fine. We'll
Yeah,
sort
that
it.
makes sense. We do that as well. But it is actually, and then some markets don't like that. So from a regulatory perspective as well, it's also tricky in some markets to do.
Mm,
But to that point as well, so tech has a role to play in liquidity management and netting off and doing real-time payments
yeah.
in markets where you have, local accounts in both markets. But then there's a skill and art to this in terms of how to make sure that, you're sending the right funds at the right time and you don't kind of like get exposed to one currency versus another. So a lot of that is internal technology, which enables that as well. But on the consumer or business side, so wherever the customer is, they just want to get the money as quickly as they can, and
Yeah.
all you have to do is to use technology to make that experience better to them for them. And that's why I think that it's, there's still a lot of friction in this space, but it's really being served by fintechs such as ourselves.
I think one of the things that was definitely like a big learning curve for me. So, I mean, um, like you, I'm an expat, and my family doesn't live here, and so, my certainly my early years post moving over, like spending a lot of time like moving money back and forth between my U.S. accounts, my U.K. accounts, and you know, there's I mean even in the way that we talk about it right now we're like, oh, it's like a cross-border payment, but like really that's not what it is, right? Like to the person who actually has to build it, like the customer is like, this is a payment, but the infrastructure provider is like, this is a capital markets transaction with two payments on either end,
Yeah.
right? And like even then, like, again, from the customer's perspective, like especially a consumer, someone like
Yeah.
you or me, like I'm like, okay, cool, I want to move money from my US account to my UK account. But from the bank's perspective, they're like, cool, like William David Jarvis over here in the United States wants to like sell dollars, buy pounds, and deposit in this other William David Jarvis's account who has no connection to this person, right?
Yeah.
They're like, those are just different people to us. Um, and yeah, it's really there's a lot of kind of like really structural challenge there that goes beyond the obvious, where it's like, actually, even if you were put aside all the sanctions and the compliance and the blah blah blah, like actually the fundamental ask is just much harder than people think it is.
Yeah, it is. It is because you essentially, like you said, there's two separate like individuals on both sides of the pond according to the banking system.
Yeah,
Although it's the same person, which is yourself. But
yeah,
then you then have to go through all these loops in order to actually get those funds moved. And then also, I think to kind of like to the industry's defense, there is also kind of like a lot of bad actors out there as well. So
yeah.
some there's a layer of checks as well that one has to make sure that things are moving in the right place. And then most importantly as well, which I think is the reason why there's always going to be friction in cross-border, is the fact that although you're moving it to your accounts in two separate countries, you're also then doing an exchange from the dollar to pounds, which is
Yeah.
two separate currencies that trade, and there's volatility sometimes in the market. So there's so many factors that need to be considered for that transaction to happen and to take place successfully, which is kind of, I think, the core of why cross-border movements it's not the same as making a WhatsApp call, for example.
Like I just think like that capital markets bit is so weird, right? Because like what people don't necessarily think about is like, all right, cool. So like implicit in I want to send dollars and receive pounds is someone has to be on the other side of that
Yeah,
transaction. So someone has to be willing to buy my
buy
dollars
your
and
dollars.
sell me pounds,
Yeah,
right? Like
and
at a
give you a
price that they
rate,
want to do, right?
give you a rate for that or a quote for
Yeah.
that. And then also the institutions also then generally need to make money off it,
Yeah.
right?
Yeah, exactly. And they're doing that to make money off of me.
Yeah, yeah. 100%. Yeah. and that's kind of what makes these things kind of nuanced as well. And then if you take that to I guess from merchants or business perspective, they're also just genuinely trying to pay for an invoice or a service that
Yeah,
been incurred somewhere else in the world.
yeah.
Sometimes I mean, it's funny how sometimes there's this Swift kind of MT-103, which is a confirmation
Yep.
that someone has sent a wire. And in some markets, just that confirmation is good enough for your goods to be like released, for
Oh,
example.
that's interesting.
Yeah, so that layer of trust and credibility that is also required because people kind of feel, okay, you know, I have the confirmation that it's been
Yeah.
wired. I'm gonna,
People dunk on Swift, but it's kind of like one of the like wonders of the modern world. I mean, let me put it a different way. Uh it is one of the very few like consistently reliable multilateral multinational organizations that like people may not like how it works, but it does work.
yeah, yeah, 100%. And then also kind of like you're spot on in terms of multilateral as well. It's just across, there's so many like banks in different countries of the world, like literally linked up to this. You know, it's literally a communications system. It's a
Yeah.
telex
Yeah.
sort of portal, right? And
Yeah. Well,
but
and that's its own thing. Like my favorite thing is like when people are like, "Oh, I'm gonna make a Swift payment." And I'm like,
yeah,
"Well, actually, you're not making a Swift payment.
yeah,
Like
yeah,
what you think is a Swift payment should actually really just be called like an email, basically."
yeah,
It's
yeah,
like I'm gonna send an email in like a special form to this bank.
yes, 100%, 100%. So I think obviously we're building something that hopefully competes with a Swift sort of from the way the
Yeah,
market.
it's its own network, right?
Yeah, but yeah, you gotta give it to them. They have built something that works, and it's also very trusted as well. Which was a point I was trying to make as well, with respect to cross-border. When you do send that money, you gotta have like trust in the institution that it's good. The money is going to get to the other side in the format that you want it to do, and
Yeah.
there's going to be no issues in the middle, and building sort of a network or infrastructure to be able to do that is also kind of it's super super mission critical, and that's kind of some of the things that we do and spend time doing as well. So you need to build that trust with your customer, especially when it involves moving money across borders.
So, um, where do you think all of this, and by this I generally mean kind of cross-border payments, remittance, your sector, where do you think things are going over the next couple of years?
Yeah,
What's
sure.
going to stay the same? What's going to change?
Yeah, sure. No, no, it's gonna change. I think that what we're seeing now, so we just talked about Swift and its benefits, is that you're seeing, increasingly, and this is more so in emerging markets, with currencies that are very liquid, more than anywhere else. You're seeing increasingly the adoption of stable coins,
Yep.
to be able to use that as a means to move money, in some of these markets. And I think that's going to be a much bigger piece of the pie going forward. So it is evolving to kind of just using something that is linked to fiat, but it's not. And there's tons of reasons why. For example, it's 24/7, right? So from a
Yep.
treasury management perspective, it could be 2 a.m. in Bangalore, whatever time in Lagos, or you on a Sunday, and you'd still get an instant quote. You'd still be able to send funds from one wallet to another. So I think the benefits of kind of using stable coins is there, and we're seeing a lot of that in terms of adoption in cross-border payments in emerging markets. I also think that when it comes to managing. So a lot of people talk about the FX sort of market as, ultimately going to be like, margin erosion, and it's zero sum, and everything's commoditized. But I think that you saw, as we've seen in the last week with all the sort of tariff conversations, inherently most countries are still going to want to hold on to their currency, and there's always going to be inherent volatility in currency prices against other currencies. So that whole FX space is still kind of very important, and it's not going anywhere. And where we see kind of where we're seeing kind of traction and what's going on is being able to offer sort of real-time pricing, even on things like weekends, like we said
Yeah.
earlier, and being able to give quotes even when the capital markets are not open, just so people have kind of the liquidity they require is also kind of stuff that is going on in that space as well. But I think and then on the tech side, on the technology side, the ability to kind of like make customer onboarding and KYC and KYB much more seamless, making sure that you obviously aren't breaking the rules and you're doing the right checks, and simplifying that with artificial intelligence. Like some of the applications that we've had with AI at Verto is using it to speed up our customer onboarding journey, where we used to have manual kind of agents, check documents and confirm that it's, the right proof of address. But all of that stuff now, we build kind of agents based on data that can help kind of like confirm that. And that's
You,
really.
you don't worry that you're going to have like AI agents reviewing AI generated like proofs of address.
Yeah, sure. We actually had that conversation early this morning where we said, okay, well, what if this is an AI generated kind of passport, right?
Mm.
And then our agent is verifying that it's correct. So I think there's that risk there that obviously now that we have a lot of generative image AI, that bad actors will effectively kind of come up with kind of documents and stuff. But there's work being done to control those risks as well. And that's kind of like one of those inevitable things that we think would happen. So the use of AI in kind of like speeding up the payments process and also the onboarding process, and then also utilizing kind of stable coins to make money movement easier, and then work being done in sort of foreign exchange world in making it much more 24/7, and sort of creating liquidity as well. And then the netting off conversation we had earlier, which is, just
Yeah.
have pools of capital and kind of intelligently match and net off where you can and scale that. It's got a huge multiplier effect, and it's going to make everyone's life easier. So that's where I think the pocket's trending.
Cool. Um, we're drawing to the end here. So I'll kind of go into wrap up mode by taking things in a slightly different direction. So let's imagine like a alternate reality. Verto is wildly successful, and you, for whatever reason, have decided to do something different. Um, I appreciate you've got the accounting background, you've got the financial services background, but if you weren't doing Verto, what would you do?
Um, so this is gonna be a boring answer, but I always fancied myself as sort of an investment guru.
Hmm.
I so if I weren't doing Verto, I'll probably have the equivalent of a Berkshire Hathaway, which is kind of like my own kind of investment kind of shop, and just taking punts on the capital markets, hopefully well-informed punts and not speculative ones. But I'd fancy myself just doing investments, and yeah, if I wasn't running a fintech scale up, I'll probably be an investor.
Funnily enough, that is what I wanted to do when I was a very young person.
Oh, really?
Was like,
Okay,
yeah,
that's
yeah,
interesting.
I wanted to do hedge funds, equity analysis, all of
Yeah,
this stuff. And then I graduated from university in 2009, and there were no jobs that were going to
yeah,
support
yeah.
that career path at that particular juncture. And so just like I was on one path, and then
Yeah,
that just took a sharp detour into technology.
yeah, yeah.
Um,
No, I think it was more of a passion for me, rather than kind of the path that I thought I was going to be on. But I'd always been interested in sort of financial markets. Big fan of like Graham and Dodd.
Yeah, 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 no, same. I've got the thick, intelligent investor,
Intelligent investor. Yeah,
securities analysis, like,
security analysis, yeah, all of that stuff. I've been to the Woodstock of Capitalists once. I probably
yeah,
should go this year. I don't know when Warren, how long Warren will still be around for.
yeah,
I'm a Berkshire Hathaway stockholder and all of this stuff. So yeah, but also I think what we've realized as well is, and this is something that came to me as I kind of really got ingrained into this space, is that I think this is maybe some adjacent to what you're saying. The way the world is right now, it's very, very hard to have any kind of informational edge. So this whole concept of you being this super intelligent investor that, the market is inefficient and you're looking for kind of the inefficiencies based on you analyzing stocks and all of that stuff. I don't know. I don't think that's the case now because, everyone's kind of like super switched on. There's,
Oh,
lots of
I don't agree with that at all. I think that fundamental truism that like Mr. Market's nuts, right? He's either like overly exuberant or irrationally down,
yeah,
and you can always trade
just
against
taking
that, right?
advantage of his mood swings. Yeah,
Yeah,
okay, fair.
exactly.
Yeah,
Yeah.
okay, that's good. So now I just hog indexes, right? Hasn't been great I think the last 2 or 3 weeks, but I just feel like, rather than be very specific about
I can't price anything at this point.
yeah.
I'm just in like fucking like gilts and treasuries basically. I mean, well,
Oh,
gilts, treasuries, and Griffin. Like those, that's my
ah,
wealth.
yeah, I'm long Verto as well. That's probably most of my net worth. But I do kind of just hog the S&P 500 and all of that stuff, and do that like every month, put something in there, and let's see how that goes.
Cool. Where can people find you on the internet?
Absolutely. So our website is www.vetofx.com. And that's the easiest way to spot us on the internet. We also have like handles on kind of like LinkedIn and Instagram and Facebook as well. I think it's at VetoFX on most of those. And that's where you can find us. Otherwise, you can also kind of reach out to any of the team, sales at vetofx.com or ping me as well.
Amazing. Ola, it's great to see you. Thank you for the time, and hopefully I get to bump into you again at Amsterdam in 2 months' time.
Sure. Happy to be on the podcast as well. I'm looking forward to the uncut version and yeah, glad to see you again.
Awesome. All right. Thank you.